Hi there, how's it going everybody? Thank you so much for joining me for this video, and I appreciate you looking at other videos as well. Insurance is the weirdest thing. It's very strange. You buy it, you see, for the peace of mind that it gives you. You're paying for something that you hope you never actually use. This seems confusing, it seems weird, and yet it all comes together when you think of this concept of risk. You see, at some level, all of us are vulnerable. Life is unpredictable. Sometimes in amazing ways, our life changes, and sometimes it's in ways that upset everything that we're doing and everything that we were doing or have been doing. And so it is that we can take steps to mitigate the undesirable risks for ourselves, for our loved ones, and for our assets. Welcome to today's video, where obviously we're talking about insurance. I'm Blaine McDonald. Don't forget to like the video, share it with a friend that can use it, hit that bell so you're notified of future videos coming out, and the most effective thing, the most helpful thing you can do is subscribe to the channel. COVID-19 has increased, you see, the realization of the risk all around us. Insurance, any kind of insurance, is the insured's paying for somebody else to share some of that risk. And inversely, it's the insurer being paid financially to shoulder some of that risk. And if you get that principle of risk and sharing the vulnerability, then you get the idea of this principle that any insurance should be focused on taking care of yourself. This video is an overview of all insurance. And it is that we find that there's different categories of insurance. So today, and for the purpose of this, we're going to break down the categories: life insurance and all other insurance, or non-life insurance. Life insurance itself is one major category, and I want to get to that later. But first, let's talk about other forms of insurance. Most of us are familiar with some other kinds of insurance, perhaps motor vehicle insurance. We have the collision insured in case we crash our car, but we also have liability in case we hurt somebody else. Maybe you're traveling, you're going away, and it's at a place where the healthcare isn't the same as here, and so you can buy travel insurance for when you're away. Home insurance, covering a variety of things from flood, fire, theft, and yes, even liability. When my barbecue gets out of control and burns my house down and others are hurt in the process, my home insurance would cover that. Health insurance. This is a special kind of a health insurance. More about this in the next video. How about events, trip cancellation? When you book a trip, if for some reason you or the trip doesn't go, that would cover the cost of the trip. Businesses, a thing in the industry called GCL, or General Commercial Liability Insurance. That protects liability if somebody's hurt while in my business, but also errors and omission and things like that. Sports concerts. Sports events or concerts or big events like rodeos, the Calgary Stampede, things like this. The P&E is going this summer, I guess modified, but going nevertheless. All kinds of event cancellation insurance. Farmers, especially across the prairies, I grew up in Alberta, have crop insurance. They get hailed out, they get flood, they don't have a good crop. Tom Jones reportedly has his chest hair insured. Now that's really dating myself, but Rihanna has her legs insured. And did you know that Miley Cyrus has her tongue insured? These are all the different kinds of insurance. And as you can see, there's a myriad of any kind of risk that you can think of. It can be or could be insured. But notice the one missing, for I didn't say in any of those, what happens if you die? And so it is that we get to life insurance. If you die, it pays out. Protect your loved ones. You see, the death benefit from life insurance is then paid to the beneficiary that the policy owner names. If I die and I'm not around to provide income for child care or to protect my family financially, as I'm building a family, I can insure the risk of me not being around if I was gone, suddenly taken away someday. Life insurance itself has two major categories. First, let's talk about term life insurance. Term life insurance is just as you might think, term, meaning a specific limited period of time for the relevant term, at a fixed rate of payments for that entire term. Term insurance is also called term assurance. It's usually great for a specific debt, for a specific period of time. For example, business partners might insure each other or a key employee. Mortgage life insurance is a great example of term insurance. There's quite a bit more specifics on my website about mortgage life insurance. If you're interested in that, do check that out. But how about a specific debt? If I borrowed $50,000 for a brand new car, I wouldn't want the family to inherit my car and the debt that goes with it. So I might do a term to insure that $50,000 so that if I went, they would have the car and the loan would be paid off. The terms run anywhere from 10 years, 20 years, or even 30 years. And there's even a lot of product providers will have what they call a T100, a term till the age of 100, or even variations like a T8 for juvenile insurance, etc. Term insurance is cheaper, at least at the front end. Initially, I want you to think of term insurance kind of like renting. If you rent a car, you pay for it, you use it, but as soon as you're not using it, you don't pay for it. The premiums are paid and you have coverage. Stop paying. They owe you nothing. You owe them nothing. We're good to go. The second major category of life insurance, if term is defined for a specific length of time and it's designed to be, if not renewable, it's meant to be temporary. So the other kind, oh, by the way, temporary, even upon renewal, a term insurance, usually you wouldn't have to show medical evidence of health, you wouldn't require, but you're going to pay the older year. So a 10-year term today, in 10 years when I renew, even though I can renew without showing that I'm as healthy as I was 10 years ago, I'm paying for a 10-year older person than I am today. Permanent insurance. Permanent life insurance refers to the coverage that never expires. It's meant to be for life. Unlike term life insurance, it combines a death benefit and some sort of an ownership component, a savings component, if you are. The coverage, as I mentioned, is for life and increases the value of the policy as time goes on. Now, there's two primary types of permanent life insurance. More about this on another time, but I should mention they're called whole life and universal life. So remember, when we talk about permanent life insurance, the key here is that it is for expenses that never, ever go away. More on this in our next video. Appreciate you watching. If you like it, hit that like button, share with a friend, hit the bell for notifications of future videos, and would you be so kind as to subscribe to the channel so you can watch videos as they come out. Thanks again for watching.